Hi guys, I'm Harry Yodis. I've been a professional trader for 20 years now, started in 2005 and have been trading my own account for the past 10 years. Okay, let's get started with Friday, the daily report on the 12th of December, the end of the week. And as you can see from a chart of the S&P 500, it was a bad day. Now why? Okay. Well, two big news of the day. Okay, the reason why this was a bad day was because Broadcom shares down 3% Thursday after Oracle's earnings disappoint. We talked about this yesterday, how Broadcom was actually trading up after hours yesterday, but it opened the day down, gave up all those gains and opened the day down. And Oracle too continued its down day after earnings yesterday. So we had two AI darlings going down, and this exacerbated fears of the AI bubble bursting. Okay? And we also had, that's the bad news. The good news of the day was that Donald Trump is weighing the order to reclassify marijuana as less dangerous. Okay, he said this before. We'll get into it later and what I think of this sector. But first, we always talk about the S&P 500 and where the market is going. So let's begin our technical analysis. So yesterday we were very bullish. We were getting to the point where we broke out to new highs, closing highs. But today, because of the tech AI bubble type bursting, like the AI bubble is bursting type news, knocked the market down 1%. Okay. So this gives rise, technically speaking, to a double top. 1, 2, that's a bearish thing, okay? However, I'm not convinced because everything else is pretty much bullish. I don't know if this AI bubble will actually burst. We'll get to it later. But the technicals so far for the S&P are still bullish. Okay? Nothing has changed. And if we look at the sentiment analysis, we were at neutral yesterday, back down to fear. Everything is back down to fear. Okay, neutral put options. So people are still they're still antsy. They still have 1 foot out the door of this market, which I like, okay, because I think this might be a temporary move, okay, downward before we resume the uptrend. Okay, so that's it for the technicals. I think they're still bullish. Nothing has been violated as of yet, although the sole asterisk is that we're sort of forming a double top here, yet to be determined. Okay, so that's the only negative out of this positive bullish technical setup. So let's get to the big news of why this market is down. Broadcom. Okay, Broadcom, after hours, was trading as high as 420, I remember, yesterday. And then the news comes that Oracle and they're probably going to, or AVGO is probably going to spend more. Like here, Broadcom shares down 3% after hours. And you can see why. Basically because investors were selling off the stock because of Oracle fears, because Oracle leads the tech sell-off, because they think that if you read carefully, the selling started in the morning and then it really kicked into overdrive when Oracle announced its capital expenditure plans were rising by $15 billion. Okay, so that means that people thought that they're going to spend so much that it's not going to become profitable, and they took down everything in the sector, okay, including AVGO, which, by the way, if you look at the earnings, crushed, beat on both counts, and they were elevated, okay, and Oracle also beat. If you recall, this was Friday. Thursday it came down because it was Wednesday after hours, and they beat on the bottom. Revenues were flat, but they beat dramatically on the bottom line. However, they took it down because of the spending needs. Okay, it's still holding down here. A lot of volume on the selling, but we had the up move here and it's down a lot. I'm not personally into this stock, nor am I into AVGO. I still think that this move, even though this is to me still bullish, it's not enough of a destruction. It's down about 11%. Okay. I just don't think this sector gets destroyed yet, okay, because I don't think the market, S&P 500, gets destroyed yet, because I don't think this double top will play out. I think we're going to keep going higher, especially since the sentiment is still very low, and that this Oracle news didn't really crush this. I mean, NVDA, let's look at the NVDA. NVIDIA did fall down and within this consolidation thing, but it's still not crushed. Like it hasn't broken down from the 165 to 184 consolidation zone. It's still within it. Okay, it's still working out these conditions, and as you can see, everything is in neutral and a little bit lower. So it hasn't broken down yet. It's in wait and see neutral territory, as well as all of the other AI stocks are in that game as well. So AI sector hasn't burst yet. Let's say we have a caution flag, but I'm still not convinced it's going to break down, okay? Because a lot of bad news has come out the past weeks, and it's still sort of holding, okay? So let's get to the other big news of the day, and that is Trump reclassifying marijuana as less dangerous, okay? If you've been following me, you can see that in November, beginning of November, I made a tweet about CGC, which is the market leader in this space, Canopy Growth. And I think like you can pause it and read it here slowly. Basically, the gist of my tweet was that I think the marijuana sector might be turning around. Why? Okay, especially since I think that Canopy Growth, this is Canopy Growth that had a huge day today. Okay. Canopy Growth has been in a sideways consolidation for a long time, okay? And it's coming from a very big sideways consolidation ever since the beginning of the year, okay? It's been in this sideways consolidation, okay? And today was a big move on big volume. I don't know if you can see it. This is a big candle, and look at the volume bar, very huge, okay? Because of Trump reclassifying marijuana as a Schedule 3 drug instead of Schedule 1. Now, he said this before, and he didn't do anything immediately, so the market immediately crashes. After a pop, it crashes back down. Yet, for a long time, this seems to be the level for Canopy Growth. It needs to break above 2, technically speaking, to get some kind of momentum going, and maybe hit these previous highs of, let's go to about like 15 and 20. Okay, I don't know if it happens. However, this is the key point here. These are the main catalysts that I'm looking for Canopy Growth to overcome if it is going to make a sustained move to the upside. Okay, and the first thing is bankruptcy risk is off the table. Now, it was trading, Canopy Growth was trading around this area for the very real reason that is it was going to go bankrupt. It had a lot of debt that it accumulated over the years, and it was paying down the debt. And recently here I was positive. I wrote this article in November 10th because on November 7th they pretty much broke even on their earnings, and the revenues were a little bit down. Okay, but the real reason that I liked it was that bankruptcy risk to me was off the table. It has a lot more cash now. It paid down a lot of debt, and it has a lot more cash now on its balance sheet than it has long-term debt. I mean, it could liquidate its entire debt with its cash and still have some left over. So for me, this took the bankruptcy risk off the table. And just for that, I think this stock shouldn't be trading this low. Maybe it should trade around the $3, $4, $5 range, but it didn't deserve to be trading at bankruptcy level territory when I think bankruptcy risk is off the table. Okay. The second catalyst is rescheduling. And if Trump does it, he says he's going to make a big announcement. He's going to actually do it on Monday. That remains to be seen. It could be another delay that Trump does. Taco Trump might backs out. Who knows? But if indeed it is real, we should see some kind of timeline, a solid timeline on the rescheduling. Okay. And if that happens on Monday, this is going to rip and sustainably stay higher. Okay. And the third catalyst that I expect might be unfolding is that the weed bear market is turning. Okay, weed for 7 years has been in an oversupply. It's been in a 7-year bear market, and a lot of the weed stocks around this announcement period in November announced fairly good earnings, and their CEOs and their management teams were saying that after a 7-year bear market, we see some green shoots. We see some evidence that this oversupply in the market is turning, and that we're starting to get into a more balanced and fair market in terms of balancing supply and demand. Okay, there's no more supply overhang, if you will. Now that remains to be seen. That could be wishful thinking, but so far it is encouraging to see a step in the right direction that the bear market could be turning. If this is the case and we have all of these three catalysts hitting on all three cylinders, if you will, this stock is going back up to at least these highs and the $20 range, in my view, at least. Okay, if you have this off the table. Over time, of course, this doesn't happen immediately. Okay, so the real reason I like this stock, the real reason, okay, these are the three real reasons, but I think a powerful reason to buy the wheat sector right now is because, especially canopy growth, is that bankruptcy risk is off the table and the wheat market might be turning. That is the real underlying fundamentals. And if rescheduling happens quickly, this explodes margins, okay? Because this is a cash business right now. Right now, they have to hire bricks companies. They have to warehouse the cash, and it's very costly, okay? And if now they can start getting, a bank account, they won't have to do any of that. People can start taking orders over credit card. The banks will start banking them again, because right now they're debanked. If that happens, that dramatically reduces costs. So that's why that rescheduling plus the wheat market turning could be a double 1-2 punch on the fundamentals of the wheat space turning up. Okay, so that's why I like it. First, because the bankruptcy is off the table, that brings it up to $4 or $5, and if the rest happen, it brings it up to $20-$30. Okay, which is still pretty a low price historically. Okay, especially since it did a split. So all of this together, to summarize, I like the wheat sector right now for the longer term. Don't over leverage. We said to buy canopy growth here at about $1.75 Canadian, which is, I don't know, 120 US. I think that's a good risk reward, especially if bankruptcy is off the table. Okay, because that just that's a 3-4x return just from that. Okay, so that's what I see coming. So let's recap what we saw in the market. SPY, I'm bullish, although the asterisk is we could have a double top here, although I don't think so. But that is the one negative that I see in the technical picture of the S&P 500. The fear and greed index still at fear. We have a long way to go before we hit greed or extreme greed. A lot of people not believing this move, still thinking that, the AI bubble is bursting. AVGO, down. Oracle, down. Okay. NVDA, leader, down today, but holding highs. So I don't believe it, but I just think it's consolidating before another up move, as is the market, and we'll see. And of course, Canopy Growth, my favorite wheat company, but we have others. You have TLRY. That too is making a move. Okay, although this is super diluted, I wouldn't really buy this one. So there's others as well, but I'm sticking with the leader. You don't have to play them all. I think this is the one that has the better risk reward and the better balance sheet going forward. So that's it, guys, for Friday, December the 12th. Let's see what happens next week. Are we going to get the Santa Claus rally? Is the AI bubble going to continue to drag this market down? We'll see. You know my thoughts. But we'll see as the evidence comes by on Monday and the weeks ahead. So if you like this post, guys, like and subscribe. And if you leave a comment, I will answer it as soon as possible. So take care and see you guys next week. Bye-bye.